13% higher for the week. The PSC or the CPSC index, 2.2% for the day. For this week, it's a rally of about 7.5%. Oil and gas, again, a subsect of the PSU basket. The oil and gas index also up 5.5%. Autos have managed to outperform with a 6.5% move. I think it's only IT, which is managing a close in the green for the week with a gain of about 2%. But it's just a bit of a relative underperformer.
Absolutely, and actually, Rima, the day's high, we were above 23,400 today. So I think that 26,600 is not. And by the way, at 23,375, right? So another 200 points. You're now going to start to look at the bigger retracements. What is 23,600? It is a 38% retracement of the full fall from the highs in September-October last year to the lows that we saw on the 3rd of March. So that is 21,964. So that retracement, the first one, it is at 23,600. Now the question only is, will we go straight to it or will we kind of pause? Because it's been a big week, 4.5% on the Nifty, almost 8-9% of the broader markets. I think news flow, of course, will perhaps matter more and more because you're coming off very depressed levels. So it doesn't matter whether you're a down day in US, news flow comes and, in that kind of a phase, you're ready to ignore everything. But as you creep higher, things will start to matter more when they did not matter about 1,000 points lower. And of course, the second thing is this F&O positioning we'll have to see. And we'll look at some data in a bit from now. Both on index options, there has been massive covering. Short positions have been completely I think there are about 2 lakh odd contracts now on options. And if you look at the index futures, they're also, from almost 1.4 crore contracts, now the number is about 70 odd lakhs. So there's a big covering which has happened already. And is that factor going to slowly start to get a little exhausted as well, the covering factor? So things to ponder over, but it's an interesting setup, no doubt. Let's bring in Mitesh, who's with us with a quick sense of what he's making of it and what he'd like you to do. Mitesh, over to you.
Good afternoon, Prashant. We've been advocating a bullish stance on the indices. I think that's played out very well. And the Bank Nifty is now, close to that level of 50,500, which is where I thought, some profit booking might emerge. In case we don't stop here, then the 200-day average for the Bank Nifty is around 50,960. So 51,000 being around strike where the call put open interest is also there. I think that will be the next target area. But the good thing is that with this rally, I think, with this turnover, which has been very fierce and severe, most of the short-term, medium-term indicators have started to rise, which means that while you may have days and, hours of pullback, the directional bias will be on the upside, and I think, we'll eventually see higher levels. Despite the fact that this week has already seen spectacular gains in both the indices, I think this should spill over to the next couple of weeks, and we should keep making higher highs, higher low kind of pattern on the hourly and the 2-hourly chart. So we are bracing ourselves for higher levels. Therefore, the trading bias is on the long side. I have a buy on BHEL, which I would recommend buying with a stop below levels of 208 for targets of 225. And a buy on Tata Power with a stop just below levels of 375 for targets of 393.
Thank you very much for that. And today's gains should be seen in context with the weakness across the global market. So in Asia, Hang Seng closed with a gain of more than 2%. The Chinese markets were down 1.3%. Europe has opened on the back foot today. So frontline European indices are also currently down close to about 0.5 to 0.6%. So the color across the global market today is red. And by the way, the rupee is also advancing. So the rupee has now breached the 86 mark against the dollar. So that's appreciating. But the markets have bounced back splendidly from their lows, with the Nifty set for its best week since February 2021. Prashant has now moved over to the big wall. He joins in with the numbers.
Well, thanks very much for that. It's a strong rebound, and I thought, why not? Let's just put the numbers into context. Reasons, of course, we've been discussing every day on every program we do that, but just the sheer numbers, right? Which gives you a sense of where we have come from the lows and how much distance to the top now. So this is the Nifty Bank Mid and Small Cap indices from the lows. And the lows, by the way, for all these indices were made on the 3rd or the 4th of March, which is, this month. 6%, almost 6%, 10%, almost 13%. You can see the bounces. I mean, the view from the top in terms of how much distance to the all-time highs, the Nifty is still about 11% away there. You've got the Bank Nifty, which is about 7.5% away from its all-time high. Nifty Bank, 15%, and the small cap index is still down some 18%, despite, I mean, these double-digit recoveries we've seen in these two indices. Now, having said this, let's just put the current bounce and the sell-off and the bounce also in the context of what we've seen so far. This graphic came to us from Nuvama's Nikhil Ranka. It kind of very neatly captures what's happened every 2 years. So look at 2016, we had the Brexit fall, 23% for the Nifty. 2018, 2 years after, ILNFS, 15% fall. Of course, COVID was severe. It was very short-lived, but severe, 38% fall. 2022, 2 years after that, there was a Russia-Ukraine war, just about a 10% dip. And, this particular correction has been to the tune of 16%, not 6%, but 16%. At the lowest point, the Nifty had lost about 16% in value. Now, so, the message essentially is that, and sometimes it helps to look back at history and we'll say, well, this happens. I mean, this happens once every 2 years. Bigger fall happens once every 8 years, and you could look at those time cycles and kind of it is sometimes reassuring. Now let's just look at how sectors have fared. Again, I've sort of put both how much we've bounced from the lows and how much we are away from the highs as well. So some of them are pretty impressive. The metals index is up 16%. It's still about 10% away from highs. The PSU pack is up 15% from the lows, about 20% from the highs still. Oil and gas, the real estate pack. You got PSU banks. Pharma, auto, FMCG. Actually, if you look at everything except the Nifty IT index, everything else is, and maybe the FMCG as well, everything else has bounced. But the Nifty IT index, for all practical purposes, is pretty much at the lows, right? Just look at this. I mean, just under 4% bounce, and we're still about 20% off. And by the way, the Nifty IT index was the last to fall. It did not crack when the rest of the market was selling with some amount of intensity early on. Now let's look at individual stocks. So I used the NSE 500 as a basket, and I took the lows. I took the starting date as the close of 3rd of March, and I found 40 stocks which are up over 20% from that day. This is not the closing low. This is not the intraday low. The number would have been higher, but this is the closing as of the 3rd of March. 40 stocks up in excess of 20%. And I've kind of sort of, I'm going to put out about 10, 12 names, and I've bucketed them into sectors, right? This is the defense pack. These are all part of that 40 stock list. Look at Garden Reach, 40% bounce from the lows. BDL, about 30%, and HAL, about 22%. A lot of industrial names also sort of find mention. Jyoti CNC is up 43% from the lows. There's Chennai Petro 30, and there's Adani Energy, which is up about 28% as well. Kirloskar Engine Oil, Avanti Feed, NLC India are some of the others. You look at Welspun Corp, JSW Infra, KEC. The common thread between all of this is all sort of, falls in the broader bucket, broader umbrella of industrials, manufacturing, etc. And, if you can just go back to the last few plates, there's just two more. The capital market plays, there was, you had K Fintech, Nuvama, CAMS, which have all bounced about between 20 and 25%. And you also had DOMS, Amber, and Spark, which are about 20% higher. The least amount of recovery now on the other side, and that's largely showing through in consumer names. So if you can move this, Devyani, Sapphire, Metro Brands, these are stocks which have seen the least recoveries. And again, I mean, similarly, again, all consumer names, Manyavar, there's Campus, Mapma India came up, which have really hardly bounced at all. And of course, there is a technology pack, right? So Infosys, LTI, Mindtree, and Wipro are some of the other names. There are also idiosyncratic names. IndusInd Bank, where there was a sort of big crisis, stock had fallen sharply, and there was something like a KEI from the cable and wire space, which of course, the reasons are obvious, which also came up as stocks which had fallen and are yet to recover. But that's news flow related. But I think the broader message is very clear. Bounce has largely come through in industrials and manufacturing type of businesses. On the consumer side, there hasn't been too much recovery at all.
Thank you very much for giving us all those numbers. It's a quick jog of memory of what's transpired over the last couple of months. Prakash Diwan is now joining us on the show. Prakash, afternoon, and thanks for joining us this Friday. Have you been buying this week? Are you convinced about that a bottom has been made, at least for now?
Good afternoon, Rima. So I'm not too sure whether the bottom that everybody was anticipating has been made, because the market situation, especially geopolitical factors, continue to have provide some very volatile headwinds. But when it comes to buying into some of the names which have corrected and where the fundamentals have started kind of looking much more promising, certainly it's time to start nibbling. Names are the same. The themes probably are not different, but it's just that the levels have become much more attractive from a risk-reward perspective. So yes, to answer your question, part of it is yes, and the bottom. My sense is you'll probably have to wait for another 3-4 months for that kind of a stability to come or visibility to come. But in this period, I think the time direction also is going to be very healthy, even if the indices don't move anywhere dramatically. But the time direction is important for earnings to catch up. And that would probably happen from the June end quarter.
Yeah, out of the, Prakash, hi, good afternoon. Out of the data that I put out, there's no real rotation. I mean, it's just that what fell is coming up strongly.
Yeah.
And also, it's as I was saying, when I looked at stocks, NSE 500, what's come up the maximum, it's all industrial manufacturing type names. Nothing really happening on consumer side, even sectorally, right? Just look at auto, not very much by way of a recovery. The consumer sector, FMCG, these are not top of the list really. Your thoughts, Prakash?
No, absolutely, Richard. I think it very clearly figures, because the anticipated move in the consumption theme, stocks that constitute the sector, I think that's still to come, because we had a budget which leaves much more in the hands of consumers, but that's not going to be upfront, that's not going to be front-ended, that's going to come probably in the second half of the financial year. And secondly, you look at patterns in consumption. We always have things around the festival, post-monsoon, harvest time. So when you come to the second half of the year, that's where consumption could kind of start revving up. But what's likely to happen is that these companies have softened in terms of the PE multiples. I mean, what used to get traded at 60 plus times is probably in the 30-35 zone. So from that perspective, you'll probably see money come back into these names, and they will start recovering when there's institutional money buying into that. And that means you'll have to wait for the FIs. And the only thing I want to leave you with is, Prashant, within consumption, it may not be FMCG, but look at airlines. I mean, it's another proxy to consumption. Look at hotels. I don't see any reason why some of these themes will not take center stage. So the consumption could probably be more on the high-end discretionary side rather than staples and the lower end of the market. And that's why you will probably have to kind of review it from a different perspective. But yes, consumption will start. And as I said, will probably transform to the larger consumption basket, beginning with some of these very specialized themes.
What about Manappuram Finance? Bain Capital is all set to acquire stake. The first tranche, 18% for about 4,385 crore. The stock has soared. What would you do?
I think it's a good move. I think it's win-win at this point from what, the numbers we've seen. The first look does give you that confidence that Manappuram is also finally getting into a transaction which, reinforces a lot of confidence in their visibility of growth for the next many years. For Bain Capital, I think it's a very strong presence that they kind of acquire by this, this entry in the gold finance scheme. I mean, they've not had any kind of a presence, and they've been talking about getting into some of these very specialized thematic exposure to the larger financial market. And my sense is you will probably see Manappuram take some time, during which Muthoot or somebody could probably start doing very well. And remember, the size of the market has become so big now, with so many banks also kind of taking a big share out of the gold financing scheme. It's no more those specialized NBFCs that have the mainstay kind of footprint out there. So I think it's a good transaction. What would I do with the Manappuram stock? I would not buy it, of course, today. It's already celebrating and rejoicing this move. But at least if I had to take exposure, I would still stick to Muthoot.
Okay. Yeah. So, it's one of those businesses, lots of backers, but so far, maybe Bain is the entity, Bain is the partner it needs, right, to finally start to do well. These refining names, Prakash, Chennai Petro, again, it came up on my list as one of the big bounces. But there's MRPL as well. Any thoughts here? I've not looked at what refining, but they typically move when oil prices fall, but product spreads are high. But your thoughts?
Yeah, so this is a play on spreads, backed with the fact that they have very little float. So every time there is some sort of an interest come back, and remember there are not too many people in the retail side who would be exiting Chennai Petroleum or for that matter any of the other smaller names. But if you look at the refiners and the marketeers together, which is like the OMCs, they haven't had such a great time as yet. I mean, you have an IOC which probably moved from the sub 120 to 130 zones, and the same thing happened on HPCL. And some report talked about why they look so promising from a replacement cost perspective. So, if you really wanted to look at some exposure, Prashant, I think, especially given the spreads and the way the crude trajectory is anticipated for the next 6 months, which is much on the softer side, my sense is that you would rather be with a IOC or an HPCL and also leverage on the ability to pay very, very rich dividend. In fact, I don't know why I would miss out on IOC at 115, 118 and the kind of dividend yield that it provides at those levels. So I think that's where the payoff is. But yeah, Chennai and Petroleum could kind of outshine in some weeks, but it's not something which I think is very robust from a long-term perspective if you don't have other stronger things in your portfolio.
Bajaj Finance, fresh 52-week high on that. The uncertainty around Rajiv Jain has come to an end. This is a stock which didn't correct too much, and now it's back to where it was. What would you advise on Bajaj Finance? Any fresh investments?
So, no, absolutely. I think if you were to take exposure to the BFSI sector as a whole, and I think there's enough and more that's been spoken about why that would be the sector that will lead from the front in terms of any revival in the economy. If barring this, the private sector banks, and I spoke about Kotak the other day when we were talking about Indices, and look how people realize that low float or a limited float could kind of start impacting some of these stocks very positively once this Bajaj Finance is not low float for sure, but I think the uncertainty and not just the leadership but also the alliance partnership going out of the way, and the kind of move that they could see in Bajaj Finserv. It's also kind of making people realize that things are finally much stronger for Bajaj Finance going forward, and they'll probably be better off in terms of the growth rates, the credit growth rates, as the cycle on consumption picks up. So the recommendation is buy it on softer valuations. Of course, this is not very cheap, but then it comes with premium valuation. It's always been very premiumly valued. But my sense is, I am a value investor. I would rather look at some of these names, very high quality names in the portfolio, just to give that stability, but at softer valuations.
All right, Prakash, we'll leave it there. Thank you very much for joining us. Good conversation as always. Appreciate your time here. Have a good weekend. We'll talk again soon next week. We take a quick commercial break here. We're going to come back in just a bit from now. And we continue to talk markets. We'll have Alok Agarwal, head of Quant and fund manager at Alchemy Capital Management, join us on the other side. Stay tuned. Welcome back. Alok Agarwal is with us, head of Quant and fund manager at Alchemy Capital Management. Alok, good to have you with us here. Back on the program, Prashant here. So a clean 1,500 points now from the lows of 3rd of March, Alok. What are your models telling you? What is your analysis? How much more? And will this continue as we come back next week?
Yeah, hi Prashant. I think the last time also when we spoke, our models were kind of suggesting that the bulk of the correction is over, although it's always difficult to pinpoint the exact peaks and the troughs. We are not really surprised with the kind of bounce backs that we have seen in this market. Among the indices, we saw that whether it is the large caps, the Nifty 50 or the Nifty Next 50, mid and small, everywhere there's a bounce back. Anywhere from 5 to 10%, the indices have bounced. Conditions are changing both locally and globally at the economic level as well as some of the corporate level as well. So which kind of gives us confidence that this recovery is possibly not just a 2-week recovery. It has much more legs to it. At least for a few more weeks, we can see this recovery pan out. The short covering, etc., is likely to pick up. And yes, we remain positive, at least in the near term. And then as things pan out, as things unfold in terms of growth numbers, that will decide the fate of the market for the rest of the year.
Alok, hi. So as a fund manager, are you all in? Have you, are you still holding on to some cash? And what have you been buying in the last 1 month, or should I say last 2 weeks, as the recovery has ensued?
Difficult to say. Hi, Rima. Difficult to say about the last 2 weeks. My models do not go for a cash creation kind of a methodology, although it swings between whether one has a little more aggressive approach or a defensive approach. Yes, even now the approach is a little more defensive, but not via cash creation, but via giving higher importance to the quality and the balance sheet than on the growth projections alone. So yes, there have been changes in the last few months. There has been more increase in the exposure to consumer discretionary, some of the domestic healthcare, and some of the financial services, especially on the capital market related stuff. So that's where the increase has been there. The decrease has been there primarily on the industrial activity oriented sectors.
You know, I was just looking at what has done well, Alok, from the lows. It is all manufacturing/industrials. You throw in, names like defense and, pipe makers and whatnot, but no consumer names. Maybe a few, but they are the exception rather than the rule. It's pretty stark. So all this, and especially, for a brief while after the budget when they announced those tax breaks, and we were in the midst of a correction anyway, the feeling was maybe whenever the market comes back, it's going to be consumer names which will come back, but no such thing.
No, I completely agree, Prashant. And the consumption basket also needs to be looked at a little more closely. All these years, we have been more attuned to look at consumer basket, especially in terms of staples and discretionary. And discretionary typically meant something like an auto or some maybe food businesses. But, the recovery that we have seen in some of the spaces like hotels or in some of the airlines, I would say hospital is in between a pharma or a consumption. These are the sectors that are actually done pretty well, not just on the back of the price moves, but the earnings growth in those sectors and the projections out there are only showing further visibility of growth. So yes, certain baskets of consumption are doing pretty well. And as you rightly pointed out, some of the industrial names had seen significant correction, 40-50% plus kind of correction. Some of that could have been warranted because of some excess moves that had happened. But markets, they tend to move in excess both on both sides, on the exuberance as well as on the fear side. So we are seeing some bounce backs in some of them. Not all industrial activities or not all industries are the ones that we have reduced exposures to, but some areas like the defense, etc., they are still holding on to structural growth prospects where the outlook is remaining positive even now.
You said you've increased your allocation to capital marketplace?
Yes.
Okay. And what is it?
The capital market space, if I were to highlight, Rima, now there will be multiple of them. So there will be wealth managers, asset managers, the exchanges, and some of the processors as well. So across the gamut, they are into the financial services side. The rising penetration in India barring the recent reduction in volumes, but the rising penetration in India in terms of capital market penetration and participation by the public, that's likely to ensure that these companies continue to do well. And they do not have any balance sheet risk in terms of lending as well. So the growth prospects as well as their deliveries are actually quite at the top.
Any names in particular, Alok, which stand out to you?
Also difficult to give names, Prashant, but there are
which category? Exchanges you're talking about. Only exchanges.
So the exchanges, yes, both the listed exchanges, be it the MCX and the BSE, we are positive on them. The wealth managers and some of the asset managers, some of them are combination of all these businesses as well. So combined, we do see large growth prospects. And Prashant, the interesting part is some of these businesses are actually trading at 15 to 20 times valuations for growth rates in excess of 20%. That's a difficult combination to get these days in the market.
Alok, lots of changes in the insurance sector. So many announcements, deals in the last 1 week. Hinduja Group, Patanjali Group, Bajaj saying they're going to go solo. They're breaking their partnership, 24-year partnership with Alliance. Your thoughts on insurance sector and anything that's, in the changes that we've seen in the last 1 week, what stands out?
Interestingly, there are certain sectors which, as a sector, they hold a lot of promise and growth for the long term. But sometimes it gets difficult to pinpoint and go to the stock level for the investment purposes. The kind of regulatory changes that keep happening in the sector, that also hinders visibility of growth and the certainty factor to it, due to which currently we do not have any insurance name into the portfolio. But yes, this is a sector that we do see growing for a longer term. Currently, not really there in terms of investment. But yeah, we'll be on the lookout for more visibility of growth in there.
No, point taken. Let's just put some of these big movers today up on the air. So Manappuram, of course, news related, but look at Tejas Network, for example, right? Across the board, it's between at least 10%, and of course, in the top tier names, 30-40% bounce as well. Tejas, the recent low was on the 17th of this month, which is, I think, earlier this week. The low was about 646. We've recovered about more than 150 rupees from there. Jupiter Wagons is seeing a big move today, 11%, 348 right now. There is Reddington, which is coming up. It didn't obviously fall very much at all in the correction, but 250 or so on Reddington. There is Ola Electric, which is coming up, but you get these bounces once in a while, but that's eventually faded. We'll see. Raymond is coming up nicely. The low recently was about 1200. And it's bounced 20%. Stocks at about 1,500 now, a little over 1,500. I mentioned Chennai Petro and MRPL earlier. There is what else? HCC, there was that order with Tata Power, and of course, completely crashed. Tata Power low was 21. Stocks at about 27 right now with today's 10% move. Viatech Vabag, there is of course news there, about 8% in the green. JM Financial is up about 6.5%. Lots of names, lots of volume-led moves here, which are coming through. A name like EQ, I think, which is fairly recent listing, I think. Not fairly recent, but listed in June of 2023. It listed at about 390, stocks at about 285, but the recent low was 166. So that's a 100 rupee bounce on this one from the lows very quickly. And SIS Limited, the security services company, lots of names. Skipper Limited is another one, about 4.5% pop. There's Green Power, all decent sized volumes as well. So it's not as if this is all happening with less volumes. And of course, market breadth remains about 3:1. Yesterday it was about 2:1. It's a little better this afternoon. Just closing thoughts, Alok, to your mind, is it possible as we get closer to the 2nd of April dateline, the market turns a little cautious? It'll be natural, right? Wait and watch and then take a call. Or you think, one should go into this one, especially if you're trading. If you're owning stocks and you've owned them and you've seen them fall and then are bouncing, well, nothing to do. But if you're trading, what would your stance be?
From a trading angle, as it is, Prashant, one got to be in the side of the trend of the market. Currently, it looks like we are bouncing back, and this recovery looks like having further more legs to it. There have few more changes that have happened. So while the correction started off with the growth coming down, with the kind of liquidity injection in terms of open market operations that the RBI has done in the last couple of months, it is not a mean thing. Overnight, we also heard in the last 2 days when the outlook on the Fed rate cuts came through. One of the data points that skipped everybody's attention was the fact that the balance sheet runoff, which was at the rate of $60 billion per month, that has been reduced to $40 billion a month. This is a significant number because every time they have done that in the past, the balance sheet reduction program being reduced further, that has led to an increase in the market and the risk perceptions and the risk on doing better. So one of the events, as you said, 2nd April being on the tariff side, once that event is further out, with each increase, anybody sitting out or sitting short in the markets might have a difficult time, if the markets continue to rise higher. The growth numbers look better. The economic numbers are bouncing back. Even if I look at one of the numbers that I look at for the proxy for the India's economic growth is GST collections. From May till December, we were hovering at 6.5 to 10% kind of growth numbers. Last 2 months have been at a 9 and a 12% growth. So the numbers are looking up, going by the way the monetary easing is happening in India and the regulatory easing is happening in India. Things look up in terms of growth bouncing back. And once that hurdle date of 2nd April is taken out, I'll not be surprised if this recovery actually gathers further strength.
Thank you, Alok, for joining in. Enjoy your weekend. We'll get into a break. On the other side, as always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few calls that you could trade over the weekend.
Okay, well, welcome back. So what, 20 odd minutes to go for 23 to be precise for the market closing. And it's turning out to be a very, very good week. Nimesh is with us with D Street Chatter. Nimesh, good afternoon. As they say, jaan mein jaan aayi.
Oh, absolutely.
I'm sure people want to talk. People are calling.
Yeah.
Which was not the case till a few weeks ago.
Oh, absolutely, Prashant. Clearly, jaan mein jaan hai. I mean, look at this week, right? It's not only about today, but this week itself. The Nifty up 4%, broader markets up 8%. A lot of individual stocks have rallied and pulled back 20-25% as well. So that's the kind of sharp pullback we've seen in this week. And also, it's helped by institutional buying. Last week when we did the City day with the City team, they very clearly said that at least at their desk, the selling intensity has come down, and that's clearly visible in the FI data as well, right? Yesterday was a number where FIs were actually net buyers in the India market, so that was a big change, and that's helping at the margin, not only in the Nifty and the Bank Nifty, but in the broader markets as well. I guess that's the kind of day today as well. But today, for a reason, we'll see a very large number because of the FTSE rebalancing of $1.4 billion. So the number may look large, but do account that it's because of the FTSE rebalancing of $1.4 billion. The sector which has consistently done well this week is the PSU basket. Again, in today's trade, the sense is that there is buying interest. And I've been saying this for the last few days, that buying has resumed in the PSU stocks. And rightly so, right, Prashant? Because if you see this week, there are a lot of order wins which the government has issued to a lot of the PSU companies and private companies. So the order issuing seems to be back, and that's the reason why there is a bit of excitement there. Now after this big rally, what to watch out for? I guess this level of 23,300, 23,400 is a bit of a supply zone. So maybe next week you will see a bit of consolidation in the Nifty, but Bank Nifty may still do well. And the feedback I'm getting is maybe one last dash towards broader market stocks may happen next week. So Nifty may consolidate next week, but you may see a bit of a rally in the broader market names. That may just continue.
Okay, Nimesh, in terms of individual names, what's on your list?
So the first stock on my list today is Tejas Networks. Big move on that name and large volumes as well. Again, we've seen the trend for the last many days that whenever there is a small order win and the stock reacts very sharply. For Tejas Networks, the buzz is that the company is likely to bag a very large order very soon. It's going to be a domestic order, so that's something to watch out in Tejas Networks. The second stock is CAMS. We've seen a bit of pullback in all the equity derivative plays, and that's the play with CAMS as well. So a bit of pullback rally in CAMS as well, and backed by fire buying. The third stock is L&T Finance. We've seen some signs of recovery in the NBFC space as well, and L&T stands out only because of buying interest. I understand a very large long-only fund have turned active buyer in L&T Finance in the last couple of days. And the last is SML Isuzu. This is interesting. We saw an announcement today where the CEO has resigned, and even after that, the stock has seen a big reaction, up 13% last I checked. It's a thinly traded stock, so not large volumes. But the street is anticipating a very large corporate development very soon. So maybe there is something which is brewing because of which we're seeing a big move in SML. And remember, this last 10 days has been the week for M&A as well. So maybe something is cooking there as well.
Well, stocks are already excited. SML, Isuzu, Tejas, all the ones that you spoke about. Thank you very much for that list. Mitesh is now back with us for a few more trades. Mitesh, hold on to your longs over the weekend and any more ideas.
I would say so. I think, we've slightly come off the day's high, but that still doesn't, warrant any kind of worry, especially given the fact that the Bank Nifty is holding steady near the day's high and above 50,500. So in that sense, I think, maintaining longs would be a good idea. On the stock side, a BTST or Pidilite is what I would recommend. Keep a stop just below levels of 28.07 and for a target of around 28.60 here. The other one is Policy Bazaar, which has done very well in this week. That's a BTST with a stop just below levels of 1590 for targets of 1625.
Thank you very much for that. Let's talk about the defense stocks. They're in focus after the Defense Acquisition Council approved 8 defense proposals worth over 54,000 crore rupees. Vamakshi is here with the details and the fine print.
Well, Rima, the Defence Acquisition Council, like you rightly pointed out, that is the DAC, has gone ahead and approved 8 defence proposals worth over 54,000 crores. Now, keep in mind that under these proposals, they are going to acquire certain things. The first one being 1,350 HP engines for T-90 tanks, and the key beneficiary of this will be BEML. Apart from that, they'll also be acquiring Varunastra Torpedoes Combat, which is an indigenously developed ship-launched anti-submarine torpedo. And on the back of that, the key beneficiaries include BDL as well as BEL. BDL means Bharat Dynamics and BEL for Bharat Electronics. Now keep in mind the third thing that they will be acquiring is airborne early warning and control aircraft systems, the key beneficiaries of which include BEL, Astra Microwave as well as data patterns. So this in turn bodes well for these counters because some order wins could come their way. But apart from that, the DAC has also gone ahead and said that they've approved guidelines for reducing the timelines at various stages of these capital acquisition processes, and this in turn will make it more faster, more effective as well as more efficient, which again bodes well as far as the order timeline is concerned. So therefore, this development bodes well for the defense counters, and they're surging in trade on the back of this development.
Thank you very much for that. And 15 minutes left for us to round up what's been a fabulous week for our markets. And now Vinny's joining in. Hi, Vinny.
Hi, Rima. Afternoon. Fabulous week is what we are saying, and hoping that, you know, this next week also what you're watching out for, green at least on the screen today and this whole week is what we're seeing. But let's bring on board our market expert as well. Hemang Jani is joining in with us now. Hemang, afternoon, and thank you so much for joining in with us. Let's talk about this week that has gone by. A good week, right? We're keeping those levels. Nifty is managing to hold on to it quite strongly today as well. Next week, what is it that we're watching out for? What is it that we should keep an eye out on?
And thanks for having me. So clearly, it's been a big relief for the market. And what is really interesting to see is that you're seeing the breadth getting better, the volumes getting better, and most importantly, the flows, which people were waiting for such a long time. You've seen a dramatic, revival there. So clearly there is a feel good, and we do think that things should get better because a large part of the pain is behind us. I think the key to watch out for would be what kind of numbers and data are we really going to see as we step into the next quarter and new financial year. And also part of the flows, because one doesn't really know how it's going to play out because the dynamics are completely different. But on the one hand, you are seeing a short covering on the future side, and the flows from the FIs have revived. So next few days are going to be very crucial to see how the flows pan out, and I do think that we might see a bit of a pause, but the overall trajectory and direction of the market is surely positive.
The Nifty IT index is going to go home absolutely flat for the day. So for the week, though, it will manage a little bit of a green courtesy yesterday's gain. So Hemang, the fear surrounding Accenture was its exposure or the revenue that it gets from the US government, which is about 8%. Have you done any analysis that in case this dodge kicks in and the US government terminates certain contracts, will Indian IT companies be affected?
Prima, I think initial reaction that we saw across some of the names, particularly Wipro, HCL Tech, Infosys, was driven by that Accenture statement and the fact that the outlook that they put out was not so encouraging. But I don't think there is any meaningful direct business that Indian IT companies have. So there is a bit of a relief. So I think more than the Accenture and the government related business that may get impacted, I think the Indian IT companies are going to be driven more by the kind of exposure that they have, US versus Eurozone or some other geographies, because US is really not sure how things are going to pan out. And for most of the Indian IT companies, US accounts for a substantial part of the business. But names like TCS, Tech Mahindra, where they have a slightly higher component of Europe or ex-Europe and ex-America business, they are relatively better placed.
Okay, Hemang, thanks for that view coming in on IT stocks. Do wait by with us. But earlier today, we also spoke to Gautam Chichoria of UBS Securities on the Indian market and whether it has reached the bottom. We also spoke to him about the possible impact of tariffs on India. Listen into what he had to say.
Near-term perspective, it looks like the bottom has been made very clearly. And that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions both from the central bank and the government of India in the last couple of months have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known. Not just for India, even global equities is not priced in if it leads to slower global growth. So firstly, the impact of global tariff or these tariffs on global growth and the impact on markets, I think globally is not priced in. That's our house view. Will it lead? What kind of tariffs will it happen on 2nd April is anyone's guess. How long they last and therefore the impact on global growth and recession, again, too early for us to comment. But if there are meaningful tariffs which continue for a prolonged period, it will definitely lead to a growth negative surprise globally. One, there's a second order effect, which is how do different economies and countries respond to those tariffs? So one is it's difficult to predict what US president does on 2nd April, both in terms of degree and quantum. Second is how do different economies and countries respond? Like if there's a big tariff on India on 2nd April, will India wait for the trade deal to be signed and do nothing? Or will India impose tariffs in retaliation immediately and continue the trade deal discussion? Will have very different implications. Firstly, the Nifty should compare to 22,000 levels, not necessarily 23,000 levels. That's where the bottom was made. From that, Nifty should end up this year. Will it be double-digit returns, single-digit returns? Again, too premature. And that's why I used the word tactical in the beginning. Bottom made. Bull market is there or not is too early to say that. But sector picks, irrespective of what happens, at least in a relative way, definitely is private banks, as Vishal highlighted. Consumption names selectively again, because there are enough catalysts around pay commission coming up next year and the tax break we saw this year. And finally, very selective names around the industrial basket. Tariffs, we are less worried about how it impacts India directly in terms of what US tariffs are for India. Because it's out in the media that they're talking in terms of a bilateral trade deal. So even if there's a tariff which is a shock on early April, it's quite likely that it followed a trade deal and we have a much more equilibrium state, which actually not necessarily bad for India in a bilateral sense. What we do worry about from a tariffs perspective is not the direct impact, but the indirect impact. If the tariffs in general leads to a global growth slowdown, it will affect Indian markets and Indian economy. So that's a much bigger worry for us rather than just the tariff rate which US imposes on India on 2nd April.
Okay, on that note, actually, let's just slip into a very short break. But don't go anywhere because after the break, we'll continue the market chatter and talk with Hemang Jani on the other side. Welcome back to Closing Bell on CNBC TV18. We have just 6 minutes before we close, but Hemang is here with us. And Hemang, looking at overall the performance that we've seen coming in, specifically this week, let's talk about realty, right? That's been the top sectoral gainer. We have seen these names come back, and there had been some pressure for the last few months for these real estate names. Anything specific that you're looking at in terms of the realty side and, the trend that you're watching out for?
It is a high beta sector, and when the market corrected, many stocks corrected quite sharply, about 30-35%. But what stood out for us during this correction is that, something like Prestige Estate, which also corrected incidentally, looks quite okay because there are a couple of launches, and overall, our interaction with the management suggests that the new sales booking and the take on the quarterly numbers, the March quarter could be much better than what the market consensus is working with. So selectively, we would be, buyers into, names like Godrej Property and Prestige Estates. But what we must understand is that, one will have to be very selective because it's not as if that you're going to see this kind of a momentum continuing for the full year.
Manappuram has made a big move, 7.5% to close. Would you buy Manappuram at these levels, or do you think all the good news is in the price? The stock is at a fresh 52-week high.
Rima, what a deal. I think the market was waiting for it for a long time. And though the stock may pause, a bit because of the kind of move that we've seen. But when you look at the fundamentals, the numbers, the valuations, if the new, investor comes in at a, significant premium, and more importantly, the management team changes, then surely the company would deserve a much better valuation. And anyway, the sentiment towards NBFCs has changed, over the last, let's say, 3 weeks. So I would certainly be looking at Manappuram very positively, even at current levels, or there is a bit of a small correction here and there. I think it will be a great entry point.
And Hemang, any thoughts coming in on the defense side as well? Obviously, we did have those news flows coming in, but anything exciting that you're looking at? BDL, BEL, anything on that front?
Team should do well, though there have been corrections, and PSU, the space is seeing a bit of a rebound. But I think what we like at this point of time are names like Bharat Electronics, BML, HAL. I think overall, the order inflow part or the numbers expectations that people may have, I think these companies are extremely well placed.
The biggest gainers this week are the insurance stocks, at least in the frontline pack. SBI Life, 11.5%. HDFC Life inching towards a 9% up move. Lots has changed, Hemang, in the insurance pack this week. Patanjali makes its entry. They buy Magma. Bajaj Allianz is split. So Bajaj Finserv will go solo. There have been deals struck. What is your take on insurance? Any stock which is attractive?
I think what is broadly excitement for the sector is the fact that, finally this Allianz deal has been done in the sense that they've decided to separate. And now it remains to be seen, what kind of plan would Allianz have in India, whether, they would tie up with any of the existing players or they want to set up on their own with some local partners, minority stake. I think the key takeaway for us is that the foreign partners really are looking for a much larger stake and more importantly, much larger say in, their operations. So I think depending upon how things go and whether they are able to acquire any existing companies, there could be further action. But overall, we continue to be positive on the sector. We do like SBI Life at this point of time. Even Max Life is something that we've been liking for a while.
Thank you very much for joining in. Coming to the close of what's been a very strong week for our market. The Nifty Sensex end with gains of more than about 4%. The Nifty today touched the 23,400 mark on an intraday basis. It's closing shy of that level, but with a gain of 180 points. Sensex higher by 625 points. Nifty up more than 4%. The broader markets, mid-cap index up more than 7.5%. Small cap index with a gain of close to about 8%. Remember, today's flow picture will be impacted by the FTSE rebalance, which is expected to result in inflows of about 1.5 $1.4 billion to be precise. Lots of PSU stocks on the gainers list today. So if you look at the front line, gainers, you've got an SBI Life, NTPC, BPCL, ONGC. PSU's life insurance stocks did well. SBI Life was the top gainer for the day and for the week. In the Bajaj Finance, where Rajiv Jain has now been elevated, the uncertainty comes to an end. The street is happy that he stays on with the group, committed to the business. The stock hit a fresh 52-week high, 3% higher. And then you had a couple of pharma names and healthcare. So Sun Pharma, Apollo Hospital on the buyers list, and autos, Bajaj Auto, Tata Motors, also higher in trade. TVS Motors stands out. On the way down, IT on the back foot, Infi, Wipro closing in the red.